All right, welcome back. In this lesson, we will be talking about the best times to trade, which pairs you should be trading, and we will kind of recap on spreads and liquidity and things like that, just in case you need a refresher on that. So we're going to talk about the main trading sessions, the best times to trade, the worst times to trade, and the best pairs to trade during each session. So when you are deciding what pairs you want to trade, it is very important to also make sure that you are trading those pairs when the spreads are low and the liquidity is high. And so in the previous module, we talked about spreads. Just in case you need a little refresher on that, spreads is the difference between the ask and the bid price. And this is how the brokers get paid. And so you want to minimize your cost by trading when the spreads are low. And you also want to make sure that when you are selecting a broker, that is something that you are taking into consideration when choosing your broker on how high their spreads are. Liquidity is basically how active the market is. So you want to trade when there's high liquidity in the market. And liquidity is basically determined based on how many traders are trading and the amounts and the volume of trades that are in the market at any given time. So volatility is how drastically price is changing. So if you're seeing spikes in the market and big, large moves in the market, which I'll show you an example of that. But this is when volatility is high. This is typically when the market is moving a lot, when there is a clear indication of what direction that the market is going. This is during the time that you actually want to be identifying positions and entering trade. So the market's liquidity has a high impact on how volatile the market is and how much that the prices are fluctuating in the market. So high liquidity is the best times to trade. Low liquidity is the worst times to trade. So when it's high liquidity in the market, you're going to see large impulse moves. You're going to see large candlesticks. And this can also happen when there are news releases. So when some news comes out, or when the president says something, or when the owner of a company or a CEO says something, this can actually move the market drastically. So you want to take all of that into consideration, and you always want to have a stop loss set, because you never know when some liquidity or some high volume is going to enter the market. So market makers like banks and things like that, hedge funds and large investors, they also have the ability to create volume and liquidity in the market. Now, low liquidity, which is not the times that we want to be trading, there's little to no movement, there's very small candlesticks, and you'll see a ranging market, which is also known as consolidation. You want to make sure that you are not entering into trades during these times. You never want to force trades. You always want to react to the market instead of trying to predict the market. So another thing that causes low volume in the market is bank holidays, and typically around the session close. So if you are trading the New York session, afternoon, things tend to slow down because the market is, shifting, and people are liquidating their positions, and the market is going to be closing at 5 o'clock. So around that time, you can see things will actually tend to slow down, and you want to be exiting the market or making sure that you have secured your positions. So let's hop into the different trading sessions. So there are 4 different major trading sessions. You have your Sydney market, which is open from 5 p.m. Eastern to 2 a.m. Eastern. You have the Tokyo market, which is between 7 p.m. Eastern and 4 a.m. Eastern. You have the London session, which is 3 a.m. Eastern to 12 p.m. Eastern. And then you also have the New York session, which is 8 a.m. Eastern to 5 p.m. Eastern. Now, the most popular sessions, or the sessions where you're going to see the most volume, is the London and the New York session, and particularly during the London and New York overlap, which is between 8 a.m. and noon. So that's typically the best time to trade. 8 a.m. to noon Eastern is when the London and the New York sessions actually overlap. So keep in mind that unlike the stock market, the Forex market typically never closes because the currencies are always being exchanged. However, it is a 24/5 market, which means that it unofficially closes at 5 p.m. Eastern each day. And it also is closed from 5 p.m. Eastern on Friday to 5 p.m. Eastern on Sunday. So there is a small closure, but there are, different assets that are traded during those times, like cryptocurrency and things like that. So really the market never closes, but you want to actually not be in the market when there's not a lot of action going on. So you want to trade during the times when there is a lot of movement in the market. And so I said that there were 4 sessions, but I want you to also understand that the Sydney and the Tokyo session is kind of grouped together and referred to as the Asian session. So when you hear people talk about the Asian session, that's what they're referring to, the Sydney and the Tokyo sessions combined. And so most traders will say that there are 3 major sessions: the Asian, the London, and the New York. And as I said before, the main time when most people are trading is between 8 a.m. and 12 noon Eastern Standard Time, when the London and the New York sessions actually overlap. And so just keep that in mind. So if you hear somebody say that there's 4 sessions, technically there are, but the Asian session, the London session, and the New York session are the main ones that people typically refer to and trade. And so let's hop into breaking down each one of these sessions. The London session, this is where most of the volatility actually happens, especially, like I said, during the London and the New York overlap. Most trends actually start during the London session and they play out during the New York session. Almost all of the pairs can be traded during this session, and liquidity is usually high and the spreads are low, which is why you'll see a lot of traders actually trade during this time. Popular pairs that are traded during this session is, of course, the Euro USD, which is one of the most popular pairs that most traders actually begin their journey with. GBP USD, USD JPY, and USD CHF, which is the Swiss franc. The Tokyo session, liquidity tends to be very low during this time. You see a lot of ranging and consolidation during this time. However, there are some pairs that typically move during this time. You're going to have your Aussie, which is the AUD USD, the Australian dollar against the US dollar, the USD JPY, and the NZD USD, which is the New Zealand dollar against the US dollar. Most moves actually begin during this session and they trickle over into the London session. So most traders like myself, they tend to analyze the price action and the charts during this session to see what setups they're going to be looking for in the London session. Next, you have the New York session, which is very high liquidity during this time, around 8 a.m. to noon, like I said before. And the reason why the New York session is so popular is because this is when the stock market opens. The stock market actually opens at 9:30 a.m. Eastern. So you're going to see a lot of movement, not just on the Forex side, but you're going to see a lot of movement in the stock market as well. And with that being said, most of the economic reports like the CPI are released during this time. So you can see spikes in the market. So again, you always want to make sure that you have your stop loss set, like always. I cannot stress that enough. Make sure that you have established your risk and determine how much pips that you want to risk per trade before entering that trade. Never enter your trade without a stop loss, or you stand the risk of your account being blown. So make sure that you are setting your stop loss because news typically comes out during this session. All pairs containing the US dollar is usually traded during this session, and the New York session typically slows down after noon, especially on Fridays, because Fridays people are liquidating their positions if they are not swing traders and they are not anticipating on holding their positions over the weekend. So you know, it's pretty self-explanatory once you learn what pairs that you want to trade and the times that you want to trade them. You typically stick to those sessions, especially if you are a part-time trader and you are trading around your current schedule. So I did say that I wanted to show you what it looks like when there's some news that is released or a spike in the market. So I have a screenshot here of a recent news release that happened during the New York session. And so as you can see here on the chart, there was a little consolidation in the market. And then that big long green candle was when some news was released. So say for instance, you were in a buy position and the market dropped down tremendously and you didn't have a stop loss set, if you did not have a large account that could withstand that drawdown, your account was blown and all of your money would have been depleted in your account. So I cannot stress enough how important it is to make sure that you have your stop loss set. So we've gone over all of the sessions. Let's just recap. By this time, you should know the best times to trade, the pairs to trade, what a spread is, and what volatility and liquidity is. So for your homework, what I want you to do is to basically just decide what time is going to be best for you to trade based on your current schedule. I want you to also select which 2 to 3 pairs you will be trading during this time. And I want you to simply post your answer below. Like, hey, I'm going to be trading during the London session, and I'm going to be trading USD JPY during that session. So I hope that this provided you with some clarity and you are kind of getting more insight on, you know, what Forex is and how it is all tying together on how people are earning a substantial income by learning these markets. And I look forward to seeing you on the next lesson.